It was an action-packed week, and Gary Wagner joins us now to lead us into the weekend. Gary, so nice to see you.
My pleasure to be here as always.
All right, well, let's start with the Fed. Although Yellen says she pulled the word patient, it doesn't mean that the Fed will become impatient. How did you interpret that? How much closer are we to a rate hike here?
Well, you know, it's always been a matter of when and not if rates are going to be raised, first of all. And by taking the word patience out, it simply meant, in my eyes, that we're getting closer to the point when they'll begin to slowly hike up interest rates. But by adding the fact that just because we've taken out the word patience, we're not impatient, means that she's willing to temper that statement. And I really think that that calmed the market down.
Gary, and last week we focused on the U.S. dollar, which this month hit a 12-year high. Is there anything from yesterday's meeting that could be a game changer?
That's an interesting question. We've seen the dollar really just be a runaway freight train, really starting in June of last year. And the move up has been a move in which we've had very, very shallow retracements. Now, on Wednesday of this week, when the announcement came out by the Fed, we saw the dollar plummet, absolutely plummet. I've never seen that kind of a move, and historically speaking, it's the greatest one-day drop that we've seen since 2009. To me, we could still see higher pricing in the dollar. The fundamentals that have kept that dollar strong, meaning our economy is continuing to rebuild, it is continuing to get stronger, to me signals that the dollar will probably continue on its upward track.
All right, Gary, let's look at gold now. We saw it respond well right after the Fed, but now what?
Well, you know, there's absolutely no doubt that we've got an extremely oversold market in gold. And even in a bearish scenario, you'll get a bump in the market. My sense is the way that it came off on Wednesday, we really didn't get the follow through that I would have liked to see on Thursday. However, I wouldn't be surprised to see the market bounce as high as even $12.20 per ounce. The answer today is really going to take a look at this week's activity, not only in the dollar, have we sustained long-term damage in that, but really what kind of bounce can we look for in gold, and have we found, at least on a tentative basis, a bottom? And we're going to explore that on today's insert. You know, there's an old saying, be careful what you wish for, or in this case, be careful what you forecast. Last week, if you recall, we talked about the fact that we could see some real fireworks when the Fed meeting minutes were released. And of course, they were released on Wednesday. Really, what we've noticed, and we've talked about this over the last couple of months, has been the incredible moves in the dollar. And you're looking here at a daily chart. This is being recorded on Thursday, so this candle, this daily candle that you see here is Thursday's candle. It has come down quite a bit. If you look at the high, it almost hit 100, but take a look at the candle that we had preceding that. This is when the Fed FOMC minutes were released, and the range that we saw in the dollar on a one-day basis was the greatest range that we've seen since about 2009. And quite honestly, I don't recall seeing a day that has been this dramatic. Of course, that has absolutely affected gold because gold is paired with the dollar. So for example, on Wednesday, where we saw the market moving up in double digits, up about $20, what we were actually seeing was an unchanged market due to buying, but because of the weakness of the dollar, we had a $20 net gain on the day. Now, Thursday, this candle here represented a much stronger dollar, kind of really coming back. And what we saw here was that on Thursday's trading activity, it was up approximately $4 on the day, but of that $4, it was dollar strength that really took away the $23 gain that we saw in normal trading, because you had to subtract about $17 because of dollar strength. So we've seen just incredible volatility in the dollar and how that relates to the precious metals market, specifically gold, because we pair our gold price against the dollar. Now, we have seen some real signs that we could in fact be looking at a potential bottom in the market, and let me go ahead and pull up this daily chart. This daily chart, of course, is of the cash gold market. And you can see the tremendous range that we had on Wednesday. That, of course, is this candle right here. Thursday, of course, we had, as I said, about a $4 rise, and we are now just starting the afternoon session right here as this candle is just beginning to form for Friday's trading activity. Now, on a technical basis, what is noteworthy in the marketplace and what we've been looking at over these last couple of days is a potential bottom, as I said, and there's two things that we're looking at. First of all, when we look at the straight candlestick patterns, we do get what's called an engulfing bullish. In other words, this large move that we saw on Wednesday totally engulfed the range, or the body, I should say, the range between the open and the close. And then Thursday's activity would be our confirming candle, which is a green candle with a higher high and a higher low. The other thing that we're looking at right now is the MACD, or moving average convergence divergence, and you can see that at this point they are just crossing, which is a solid indication that we could in fact be looking at a potential bottom in the market and looking for higher pricing. When you look at the MACD, although it lags, you can see that here it definitely correctly looked at the potential for a top in the market. You can see that's crossing over here. And in terms of this bottom here, although it comes in late because it's a lagging indicator, we do get a cross here. And then if you look here, we get a cross back here. So the MACD has been pretty solid in predicting potential moves, and when filtered with candlestick patterns, I find that it really increases the probability that what we're seeing, this cross here, could really be a strong indication of higher pricing ahead. So for those chart disc viewers that are interested in more information and like this type of analysis, I invite you to go to our website, goldforecast.com, and there you can actually sign up for a 7-day free trial and get our daily report all of next week. Just go to thegoldforecast.com, and you'll see this right at the front page. Again, our short-term forecast for gold and a potential bottom in the market that seems to be in effect over the last few days.
Gary, so nice to see you.
My pleasure to be here as always, and I do want to wish all of our Chart Disc viewers a great weekend, and most importantly, prosperous trading and investing next week. We'll talk to you real soon. Bye-bye.